Welcome to Thoughts on Investing. All right, today we're tackling a massive story that's been shaking up the market. The huge, sudden drop in Novo Nordisk stock. One piece of news sent this pharma giant tumbling, and we're going to break down exactly what happened, why it happened, and most importantly, what it all means for you as an investor.
Okay, before we jump in, just the usual heads up. This is all for educational purposes. It's absolutely not financial advice, so please always do your own homework. So this is the big question, right? The one on every investor's mind. A major clinical trial didn't quite hit the mark, and the stock went into a total freefall. The question is, are we looking at a company in real trouble here, or is this the exact kind of fire sale that long-term investors dream about? Let's dig in. Okay, to get to the bottom of this, we've got to start with what actually happened. Let's look at the specific trial data that sent these shockwaves through the market and how Wall Street reacted. It all boils down to these two numbers. You had Novo Nordisk's new drug, CagriSema, in a head-to-head matchup against a key competitor from Eli Lilly. Now, CagriSema showed an average weight loss of around 23%, which, let's be honest, is amazing. But the competition clocked in at about 25.5%. And that seemingly small gap, well, it was everything. It meant the drug failed a key statistical test to prove it was at least as good, which is exactly what the market was betting on.
And wow, did the market react. It was immediate, it was severe. The stock just cratered, hitting lows we haven't seen in years, as traders just rushed for the exits. It was a classic shoot first, ask questions later kind of day.
And the fallout just kept spreading. First, analysts just gutted their sales forecast for CagriSema, some by a staggering 80%. At the same time, their main competitor, Eli Lilly, saw its stock pop, kind of cementing its spot at the top. And then you had retail investors who got scared and just started selling, adding even more downward pressure.
But look, that's just the market's gut reaction. The picture starts to look a whole lot different when you step back from the scary headlines and actually listen to what the company itself has to say about all this.
So while Wall Street was in panic mode, Novo Nordisk's management came out and basically said, hold on a second. Their message was crystal clear. This one outcome, well, yeah, it's disappointing. It doesn't even begin to derail our massive overall strategy. They're telling investors to look at the whole forest, not just this one tree that fell.
And honestly, when you look at the company's foundation, you can see why they're so calm. We're not talking about some one-trick pony here. This is one of the best-run, most respected pharmaceutical companies on the planet. They are a cash flow machine with a huge, diverse portfolio of drugs for diabetes, obesity, hemophilia, you name it. A single trial miss is a sting, for sure, but it's not a threat to a business this strong and this well-funded.
And you know, it's not just the company saying this. Some of the smarter analysts out there are pumping the brakes a bit too. They're pointing out, hey, let's not forget that a 23% weight loss is absolutely life-changing for patients. It only looked bad because expectations were through the roof. Plus, they think future studies with different doses could actually close that gap. The story for this drug is far from over.
Okay, so that's the fundamental story, the why. Now let's switch gears and get practical. Let's pull up the chart and see what the price action is actually telling us about the when and the where.
Looking at this daily chart, you can just see the damage. See that line of support where the stock had been holding steady? Well, it just sliced right through it like a hot knife through butter. And check out the volume on that drop. That's a ton of shares trading hands, which confirms that the sellers, the bears, are firmly in control right now.
So the million-dollar question is, where does the bleeding stop? Well, traders and analysts have their eyes glued to one particular zone, right around $31. Now, that number isn't random. It's an area where the stock has found buyers in the past, and it lines up perfectly with a key technical level that often signals a reversal. This is the spot everyone's watching for the selling to finally run out of steam.
So if you're trying to build a game plan here, it's pretty straightforward. Number one, you have to respect the current trend. It's bearish, so you don't want to fight it. Number two, that $31 zone is your line in the sand. You watch it like a hawk for any sign of a bottom forming. And number three, and this is so important, set your expectations. This is not going to be a quick V-shaped bounce. It's much more likely to be a process that takes months, with the stock just chopping around sideways.
All right, let's put all the pieces of this puzzle together. What does this all mean for an investor trying to make a smart decision right now?
This table really sums it up perfectly. It all depends on your time frame. In the short term, yeah, the outlook is bearish. The sentiment is negative, the momentum is down. In the medium term, it's kind of a wait-and-see game. We're looking for that stabilization around $31. But if you zoom out and think long-term, that's where the bullish case is still completely intact because of those powerhouse fundamentals we talked about.
And that really brings us to the final, most important takeaway from all of this. It's a perfect lesson in separating the signal from the noise. If you're a short-term trader, the day-to-day price action is the signal. But if you're a long-term investor, the real story, the real signal is the company's fundamental strength. Everything else is just noise.
Hey, if you got some value out of this breakdown, do me a quick favor and hit that like and subscribe button. We've got a lot more coming. Thanks for tuning in.